I ride her like a bat out of hell. Okay, I'm not good at analogies. People that know me will know this. So my analogies, I do apologise about my analogies. If I do try and attempt any, they'll be very poor. Okay, I'm not the best presenter in the world. I'm trying my best. I'm not a good teacher, but I hope I am relaying it to you guys. If you have any problems, just type it in the room. I can see your questions straight away. If you have any questions, just type it and I'll answer it straight away. So anyway, my entry would have been let's have a look. Let's move the chart. Let's move the chart. Let's say price was here like this, right? This is where price is back then. We can't see here. We can't see here, right? We're up here, okay? I've done me demand zones. Lovely. I've done me fib. I've done me other fib, and I've got this. This is what's come out to me. I think, okay, what am I going to do here? It's on the daily chart, so you've got to average it out a bit more because everybody's looking at daily chart. Everybody, all the people who earn the big money, look at the daily. They don't look at the 5 minutes. They look at the daily. So I would have looked at all that. 61.8, 50, two demand zones, and without looking at where price is, I would have put my entry here, right smack bang in the middle of it all. And it wouldn't have been in market order. It would have been a preset order, and I would have let that. As long as price has been away like this, I'm comfortable setting an order at that level. So let's have a look what happened. I moved the chart away, so I didn't know where price was, and you pretty much. I don't know how accurate you guys have been in your trading, but that to me is goddamn accurate. If I zoom in on the daily chart, you can't ask for much more than that. My entry would have been 1630, 16. The low of that was 1628.58. So there you go. That's gold for you. And I don't know if the person's in the room who did ask me about that. Try running a fib from the low at 1700. Okay. Running a fib from the low at 1700. Here, you want about here, this spike down. Okay. You want to see? Do you want to see an extension? Is that what you're looking for? Ah, right. Okay. Okay. No extension. Extension's a second nature. But if extension does fall in it, obviously more confidence. 127. Let me just add the let me add the 127 in there. I can't remember the settings. Is it 1127? 0.127. I thought it was that. I have it on me other chart that I trade using Rockies. Let's have a look. Let's have a look what we got. This will be interesting. Okay, yeah. That's pretty good. Pretty good. See? Even telling me stuff now. That's how good you guys are getting. Let's do them. Put them other fibs on. There we are. How about that? We've got a lot of activity in that area, haven't we? Extension there. Retracement zone there. Retracement zone there. Demand zone. Demand zone. When you see it like that, it just makes it so obvious to buy at that level. Do any of you guys understand what Jay just laid out to me there? If you don't understand what we're talking about, the 1.27, I can explain it to you. If anybody doesn't understand, let me know. I don't want to leave anybody in the dark about that. I'm going to judge by the silence. Apart from doubt, okay, we're getting some replies. 1.2 yeah, yeah, Eric, it's the extension. It's not it's not a retracement. It's an extension. Because obviously, if I get rid of these fibs, what we're looking for is A, B, and a C move. So you've got the A, B, and a C. The C come down is about 6764, and then you're coming off the 127 there. I mean, you got a 161.8 here, right? There's also I wouldn't mark it as a demand zone, but you know it's just interesting when these things fall on each other like that. 161.8 and a slight demand zone here as well. So this is telling me gold's not going to go much further down than this at the moment. It may do in the future, but at the moment, with all this in place, it's going to have to come back up somewhere up here before it starts going back down. If it is going down. Pip 26, you've been in Rocky's thread, haven't you? Basically, I'm just looking for a 3-point move. It's not a 3-point move. So this, if I'm working off the extension, this will be A. At the top will be B, and I will be trying to trade off C, which is the 127. C in this case will be the 127. So A, B, an extension of C. Louis the Toad, good name. Right, I was marking some zones on USD CAD while I was setting up. Before anybody looks at my zones that I've marked out now on the chart, I tell you now, do not trade off them. Do not trade from them when markets open. Okay, because this is just examples for the minute while markets closed in most areas. Because when market opens, there's a change here, there's a change there, there's a change of bias. You don't know. We want people to lay it out for us so we know where the zones are. When a new market opens, bias changes. A lot of people notice that when New York closes, goes into Asia, people find their profitable trades coming back towards their entry price. As London opens again, then it goes back the way they wanted it to. It's happens quite a lot. So Japan, the Asian session is 90% of the time, in my eyes, a change of bias for that session only. And I will wait an hour, maybe an hour and a half to 2 hours of Asian trading to let them lay out the zones. Then I can start seeing where their orders are. I can start seeing where the sell orders are. I can start seeing where the buy orders are. So before I get into this, I say it again: do not trade off these zones I have marked. This is just for example purposes only for the minute. Good, excellent. Right, I set this one up a minute ago. Get rid of this fib for the minute. Obvious demand zone up here. This one, when this occurred, this 15-minute chart, by the way, guys. Okay, because if I go down to 5-minute, it's not. There's a few clean moves, but it's not. It didn't look as clean. You know, I trade minute 5 more than I do 15, But you know, if I flick across to 15 and I see something a lot cleaner, then I will go into that. So we had the supply zone up the top, where I've got me doody little thumbs up. I haven't used them before. I feel quite cool with my thumbs up. So price has gone up, and what we do is we take the last green candle. Okay, I'm going to zoom in because your screen is be smaller than mine. We take the last green candle of a supply, and the bottom of our zone will be the body, not the wick, the solid body. A lot of people, my biggest question I have emailing me and PMing me is how do you determine a zone? Why is it not the wick? Why is it not this? Why is it not 2 candles or 3 candles? This candle is obviously a doji. It was an indecision candle because price is going to reverse here. So it would be the body, and the top of the zone will be the wick. I hope everybody gets that to me. What's the difference in support and resistance and demand and supply? Helen from USA. Again, that's for probably one of the other popular questions. I've actually got a example. I'm going to answer Helen's question now before we go anywhere. I'm going to try. Right. Helen, I'm going to explain to you guys now, because it's another big question, before I get back into that USD CAD chart, the difference between support and resistance and supply and demand. And the chart I'm going to show you is going to show you why, if 2 different traders sat next to each other, i.e. me trading off supply and demand, next to me a buddy of mine who trades support and resistance, and how I would have had 3 winning trades in a row and how he would have had 1 loss. I would have 3 winners and he would have 1 loss. Okay? And let me find the chart. Bear with me while I go through this, the forum. I did explain it on here. I'll find it. Here we are. That's the chart. This is the chart, guys, boys and girls. Right. I hope you guys can. Is that big enough for everybody to see? Can everybody see that clearly? Yeah. Okay. Hope Helen's listening. No. Oh, okay. Right. When I zoom in, you can't see the supply zone. Let me save the picture and I'll open it up. Right. Is that better, Helen? Yeah, right. So we've got our supply zone. This zone, people are going to ask me why have I marked 5-minute candles? Two candles. That is because that was taken off the higher time frame, and that made 1 candle basically. That sometimes you move time frames just to get a cleaner look on the supply and demand, as I explained on the 15-minute USD CAD. So from the 15-minute, this is how I determined the demand. Right, price had moved away from the zone up here, okay, and matured. The zone has matured. It's going to be beautiful now when it comes back down there. You could run a fib on there, and I can guarantee you now there will be a fib level through this zone. I don't need to run the fib. I can't run the fib anyway because I'm on Paint right now. Well, Windows Viewer, whatever that is. Now, when price gets down to this here, right, and it keeps bouncing off here, Helen, I hope you're watching. When price keeps bouncing off here, all those support and resistance people, they'll be going, that's support, that's support. I'm going to mark that down as support. Price can't get through it. Even here, right? Price broke through and flew straight back up, right? I would have been buyer down here all day long, and I would have been profiting again all day long, right up to the top. Okay, so the support and resistance trader has already had one losing trade here because he saw a break in the support and it didn't work for him. Why did it not work? Because we know there's supply. Look at this surge in price. It's supply. This whole zone is full of buyers. It doesn't work off one line. It works off a zone. So if we move across, okay, now the support and resistance trader is going to be saying to me, oh, it's a false breakout. It was just unlucky trade for me. Blah, 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 blah. While I've already won one, he's making excuses about this false breakout down here. And he goes to me, look, my support's working. It's fallen exactly to my line. Look at me. I'm the support trader. He would have made some money on that one. He would have cut. But look at how much price moved against him. I don't know where he would put it with stop loss, where support traders, resistance traders put their stop loss. But now he would be break even to me. It'd be break even if he did a trade off there, because here he would have sold because he saw a break and price went against him. Now he sees a reaction of support holding and he buys, and he would have had a profitable trade. But now he's got two trades and only one winner. Not good enough for me. I don't like 50%. That's not good enough for me. We come across the chart again. That line of support is holding up. All these support. This is why support people like it so much, because it looks, when you look at it to the naked eye, support looks really nice all the time. It looks like it's coming off the same line, and it will some of the time. Don't get me wrong, it will some of the time. Then this is where it happens. Okay, it really does break into the supply zone, into the demand zone here. This is where the support trader has it. Support resistance trader has his support line. He only has one line. That's what they use. They don't use a zone. They just use one line. They see a nice look at this red candle here. In any support and resistance trader's eyes, would be a sell. And those people trading the retouch, supply turning to resistance and all that crap, would be selling here because they think they're getting a retest of that zone, right? Yeah. I tell you what, I would have been a buyer down here again all day long. I would have been a buyer. And what happened? Well, the move went against him. It broke back up. It broke back up above the supposed support zone, and now his prices are back above his support zone. And now this support and resistance trader is really confused. He's looking here and going, but it held here, it broke here, it retested and come off. It must be a support turn and resistance. Now it's come back through. Why is my support line just being broken like it's what's it can be broken like, Sammy? They're confused. I'm not. Guys are gonna have to forgive me. I'm very, very bad at presenting and teaching, but I'm hoping the charts with my basic tuition is easy enough for you to see. Helen, is this really opening your eyes when I show it to you in this direction? Yes, I'm here. Have you understood how that support line, which people would have they would have drew a support line across there, and how they would have failed? They'd have a couple of losing trades, a couple of winners, and I would have 4 winners out of 4 trades on that. 4 out of 4. What do you want? Do you want 2 and 2, or do you want 4 out of 4? It's up to you. Up to you. You tell me. You being support resistance trader, I've no problems. I tell you what, if you become a support resistance trader, right, that's fine with me, because then that's more money for me to take off the losers. The people that lose off support resistance, that's more money for me. It's more money for me. We need people to lose in this business for us to win, don't forget. So, regarding when I bought down here, right? When I bought down here, and I've got that support and resistance trader has got a sell, he's got a short in there, and it comes back above, oh dear. Okay, oh dear. He's stop loss now because he's got his stop loss above the new apparent resistance line, which has been broken. Nothing's been broken. My supply zone is still got buyers within it. Now we've got a supply zone up here. It's quite a big supply zone. I wouldn't trade off it. All I used this supply zone for was simply to determine where price would turn in my long trade. And I saw price turn here in my supply zone, and I pulled out the trade for a nice healthy profit. A nice healthy profit. I had 4 nice trades along there. 1, 2, 3, and 4. Okay, I only really take the first touch, but to just to show you, you know, how powerful it is, you would have 4 winners there if you were to trade all of the touches, because at one point obviously the sellers in here, at more times it touches, there's less sellers, so the deeper price goes into that zone to find more sellers. There's loads of sellers up here, it gets touched, then there's sellers here, it gets touched, then the sellers are found down here. Okay, and that support and resist, that's the difference between support and resistance and supply and demand. I had someone arguing with me the other day in Skype about support and resistance and supply and demand. That it's the same thing. It's the same thing in one way, but in another way it's totally the opposite. It really is. If you see a break in your support line, please do not trade it. Do not trade it. Alright, let's go back to my USD CAD chart. Which was that? Was it that one? I think it is actually that. Is that? Ah, okay. Now, this chart is the chart that happened afterwards. Okay, that picture I was showing you. This is the chart, right? This is where price come up to. This is the last time we saw price. Now our supply and resistance trader has got a short in here because of the break of support below on this red candle. That's a candle that he's going to sell off. A lot of support and resistance traders would sell off this green candle here, this red candle, sorry. Price got up to here, and he might still be in his short. Let's have a look where price went. Look, there we go. Look at that. He's going in. Look how much he's in the negative. In the negative, in the negative, in the negative, and bam! Look at this we have here. Wallop. He's taken out again, so he actually comes out of that zone with a loss. Well, I'm a winner all day long. I've been winning along that zone all day long. Look at this. Look how many touches this supply zone is holding out for. We've got another touch here. Another touch. This is good for a nice ride up. Beautiful. That's where price is now. Move it on to the 15 minute. This is what I was going to show you, people. If you run a 15-minute chart of that same chart we were looking at, I'm going to show you how Elliott waves are produced. Does everybody understand? You don't have to understand what Elliott waves are, but have most people in this room come across the term Elliott waves at least? Yeah, I'm sure we all have. I'm sure we all have. Elliott wave traders are my buddies. They're my buddies. They're my buddies all the time. Because why are they my buddies? They're my friends because when I sell at this zone up here, and they wait for their Elliott wave to be produced, they're forcing price to go in my direction. You see that? Off this supply, they're just forcing price to go in my direction. So you Elliott wave traders, please keep doing what you're doing, because you're just pushing more pips my way, please. So we've got the major supply zone up here. Three absolutely beautiful candles coming out that zone. That's what I want to see. That's what I want to see. That shows me that there's a lot of sellers waiting up here. There's a big imbalance. It didn't stay there for long. It comes shot out the zone. It got close to the zone, and then Elliott wave traders started coming in. We got this wave. We've got this wave down. They tried to trade it down. They traded the same down, and they did it here, and then they did it here. Right? And what's happening, I can tell you now, is that supply is causing that to happen again and again. It causes it once here. There's the new supply. Right? When it comes back up, here's the new supply. Okay? When it comes back up, here's the new supply. Okay? New supply keeps coming into the market. Now, do you see how these Elliott waves are being caused simply because of the supply? You see that? As more people come in, as more suppliers come into the market, those zones move. And it comes up here, it comes back off this supply zone for some more nice pips. That supply zone would now be new. That supply zone would now be here. Do you see how many times, each time you plot a new zone, look how many times you'd be profitable. Again, if you traded the new supply zone, you'd have a nice move down again. Okay? Right? Lot of sellers up there because the price, look at it again. When it come up to the supply zone, what happened? A move down. If we extended this supply zone, right? You'd have 1, 2 trades off it, and you'd have a third trade. You'd have a third close trade, right? Now if you look here, it's broken through, okay? But before it breaks through, it has to have a reaction. It has to have a reaction before it breaks through. And here it has the reaction. See this wick? It hits the supply zone again and comes off. It has to have a reaction. And that's why I trade for reactions only, because on this candle here, on this wick, right, I would be a winner. To a lot of people it looks like I would have been a loser because price come up and shot through it, but no, I caught the reaction here, and I would have entered on the start of the supply zone here at 102.86, and price moved down to the wick was 74. So 87 to 74 is 13 pips in my rough mathematical skills. 13 pips was the reaction. I would have already been out for 5, 6 or 7 pips, stop at break even. And that trade would have been another winner. And it broke through. And that's why I moved stop loss to break even ASAP. Because once you do that, you take what you get. And when it does break the zone, you're safe. You are safe. Okay? I only trade the first touch. So the first touch would have been maybe this one or this one here, which come down nicely. But my main focus point here was to try and show you guys how these Elliott waves are being produced. You get a new supply up here, it hits that supply, new supply is created, it comes back up, it hits the new supply, we go down, we have new supply created up here on this body of the green candle to the wick, it comes into the new supply and bounces off it, and that's how the Elliott wave looking pattern is produced. And the reason price moves and moves and moves and moves away from it is because Elliott wave traders are pushing it further away. But at one point it has to come back to its origin, and it will. It will come back up to its new supply zone. Every time it will come up to a new supply zone. Everybody type a yeehaw if you understood that. Sammy, are you not going for a run? Sammy, are you going for a run? Okay. Yeehaw, there's all what I like to see. Yeehaw, lovely. Well, I tell you, when you see it like this, even with my crap teaching, even with my really poor teaching, you don't need a good teacher for it to be this obvious to you, okay? When you see it like this, it becomes so obvious. Uh, 2 seconds, guys. Jack Van Meter asks how to make the chart big on the screen. He asked that ages ago. If you still want to know how give me a shout and I'll let you know. Yeah, as I was saying, when you see it like in this simple law of supply and demand, then your whole trading will turn around for you, like it did for me. Hey Dean, I evaluate teachers. You are doing very well. Thank you, Louis. My missus does not agree with me, but I do appreciate some gratitude for it. Yes, thank you. Right, guys, I am going to go for a 10-minute cigarette break. I would say fag break. We call cigarettes fags in England, but I know that in America that's offensive, so I will call them cigarettes as respect to the Americans, as long as the Americans respect that football is football, it's not soccer, okay? That's where we're going to leave that. So I'm just going to pop out, get a glass of Coke, have a quick cigarette, and Asia's going to be opening over the next few hours. We're going to see what's going on, how the market's being created. We'll go for a few more stuff before. I'll answer a few questions, and yeah, having an interesting evening so far. So be back in 10 minutes, guys.